what's your call for, say, this time next year?
Well, I think that the elephant in the room really is whether Trump goes for the idea of monetizing the US assets. And the easiest way to monetize US assets is to revalue the gold price.
Peter, welcome to the show.
I'm great honor to be here.
It's been some time.
Thank you very much for asking me.
Oh my goodness, we would have rolled out the red carpet, except, with the strike and everything, the red carpet rollers are not even here. That's why we got you safely from your home. Right, give us a roundup, because many of our viewers and clients have not met you, have not had the pleasure of meeting you like myself. Give them a quick introduction of your background.
Well, I come from the Hambro banking family. I started my life as a banker, got into gold quite late, but I've been in gold now for about 50 years. I'm almost 80 years. No, I am 80 years old now. And
a spring chicken.
Spring chicken. And I bought my first trade was in platinum. I was 12, and I'd broken my leg, and the bones had been tied up with platinum wire, and so I sold the platinum wire back to Samuel Montague. My father was a director of Samuel Montague, one of the precious metal trading houses, and that was my first trade. My second trade was when gold was freed up and you could buy gold. I bought 10 Kruger rounds from Rothschilds for just about $36 an ounce, and was thrilled when I sold them for $100 an ounce, and that was one of the great trades. I stayed in the banking business one way and another, and money became a commodity, and I went off to trade money as a commodity trader, and then became a proper gold trader with Mercator, the largest gold trading company in the world, large quantity of trading with the governments mostly, and then went in the mining business again by accident and built Petropavlovsk, which was stolen from us by the Russians.
So it's a really opportune time to have you on, because not only is IG in the name itself, IG Group, it comes from Gold Index, but also we're having you on. I mean, we couldn't have planned this any better. Gold, of course, breaching that 3,600 level, managing to stay above as well, and comfortably, might I add. Everyone here is wanting to tap into your knowledge, Peter, which you have tons of. How much higher and what kind of duration are we looking at here?
Well, it's curious. I mean, given the news today of the Polish the incursion into Poland by the Russians, and the Qatari operation, it's amazing that the gold price is as low as it is, in my opinion. I've always believed that there is a general move to try and keep the gold price not too fast rising. They've let it rise a bit in the last couple of weeks. It looks as if it was being held at around 333, but now that's broken through, and I think we're looking at silver, which is interesting. I see certainly 4,000 just to catch up with silver.
Yeah, I've got the silver chart up as well, and it's incredible to see silver finally move in tandem with gold. I mean, what do we talk about duration here a lot, Peter?
Silver's been outperforming gold. It's been on a sort of 10-to-1 ratio for quite a long time now, and silver has been dragging gold up. It's moved actually faster than gold, and it's now considerably higher. But I think that the chances are that gold will go substantially higher. I've been a gold bug and much derided for that for a long time. but it has stood me in very good stead, and I think there are still some stunning opportunities in the small gold exploration companies who have been totally left behind by this move, and the chance for those to move fast and higher, I would say is very good.
We'll touch on those in a moment, but let's go back to gold. You know, so many different outfits out there, as you know, coming up with different forecasts. You know, Goldman's the other day saying that if you know, Fed loses all credibility, it could be 5,000. You know, others saying 4,000. Many of the big houses out there. I mean, what's your call for, say, this time next year?
5,000 at least.
Interesting. And so you're
depends,
on the side of those bulls saying that we're, you know, this is just the beginning. This is just tip of the iceberg of a big, you know, new renaissance for gold, and we're just getting started.
Well, I think that the elephant in the room really is whether Trump goes for the idea of monetizing the U.S. assets. And the easiest way to monetize U.S. assets is to revalue the gold price. And there's no point in revaluing the gold price from 4,000 to 5,000. It'll be from 4,000 to 24,000. That is my view. That's where the risk on the upside really is.
Lots of people chiming in on the chat there. Monkey Man saying, Peter, welcome. What is your first gold rule that you always follow when investing?
My first rule is to be absolutely certain that the gold I'm buying is real.
There you have it. Andrew McKilvey also saying, Peter, you're a legend, welcome. Friar Tuck, one of our moderators on Discord and also a core viewer of Trade Live with IG, he's asking, does the regular buying by China and other central banks provide base support for gold's market price, i.e. are they buying on the dip?
Well, China is very interesting because, and they were customers of mine when I was a trader, because we were big traders with governments. China is surprisingly not only the biggest buyer of gold, but also the biggest producer of gold. And that tells you a lot. And it's been very interesting over the last, say, 25 years that China has been encouraging people to buy gold. They were the first people to install automatic machines where you could buy physical gold out of a cash machine. But they wanted to or in my view is that they wanted to strengthen the economic power of the middle classes. And so if there was a disaster, there would be a strong economically sound middle class that could keep the country safe.
What's also interesting, and I know of that story because the first thing that came to mind was how are they going to secure those effectively, you know, gold tellers. What's also interesting is, you know, whenever anyone who is of Chinese ethnicity, whether they are, you know, from China or not, I confusingly was born in Surrey, but that's another story. You do always, if you travel, and it's still until today, I mean, it boggles the mind because we've got, you know, crypto and we've got, you know, digital cash and Revolut and all the fancy apps and everything. You still get told that you should always have meikam, which is dollars, and you should have kam, which is gold, with you at all times. So that is still something that is passed on over the generations. What ratio? Sorry, go on.
I've lived by that all my life, and I inherited from my father a little money clip with 2 gold coins, American gold coins on either side of it. You could easily break off because that was enough value to buy you an airline ticket out of wherever you were, and it's a really important thing to do. But there's so much risk involved in. I mean, why would you want to own a Bitcoin, because if we run out of electricity, what's happened to the Bitcoins?
This is
Whereas
true.
gold's gold.
But there's also a joke that isn't there a saying that gold, you dig it out of the ground to put it into another hole in the US somewhere. I feel like there is a saying somewhere.
Absolutely. And when I was asked what my first rule about buying gold was, to be sure that it was real. That's one of the risks, that there are still fake bars about, and you have to know very much who you're buying it from, and so on. So that's the most important part. But a coin with a US stamp on it, or a British stamp on it is definitely the safest thing to have. And the great joy about having a coin is you can't buy a fish breakfast with a large bar. I think you would never get change back. You see what I mean?
Yes. I completely get that, because my grandparents were goldsmiths, so I understand the weight. So even a gold bar that is like the size of this pen in front of me. Whilst we're on that, a key point that many of our viewers would like to hear from you about is the ratio. So someone listening and saying, oh, you know, I've got a bit of money in physical gold, I've got a bit of money in some miners, I've got a bit of money in ETFs. What do you think is the right ratio? What is the right mix for someone wanting exposure to gold right now?
Well, holding gold is really monetary insurance, because it is what it is, and it can't go wrong. If you have a big portfolio of tech stocks, and it's fantastic, well done, and the gold price movement to the gold price is not going to make any difference to you. But if they all crash down again, you've still got the gold, which is the important part. I've always said that somewhere between 5 and 10%, depending on the level of anxiety. And right now, at 80 years of age, this is the most anxious time I've ever known. And so I would have thought that 10%, but buy it physically. Don't buy promises. Gold is it's so easy to buy gold, paper gold. It's also incredibly easy to manufacture paper gold, because you can go and give money to a bullion merchant, and he will give you a receipt for gold. May not actually have it, but if you've actually got the bar, actually got the coins, then you know that they're yours, and you have to be careful where you put them. But that's what I would do.